Hi, I'm Steve Van Meter, certified financial planner and inventor of Portfolio Shield, portfolioshield.net, and welcome to my 2020 Ultimate Guide to Social Security Benefits. You're going to learn how and when do I enroll, how do I maximize my benefits, how do spousal and divorce spouse benefits work, what happens if I work after filing, and are my benefits taxed? You can apply 3 months before you turn 62, the earliest benefit age, and if you are 62 or older, you may be able to start your benefits the month you apply, or you can apply up to 4 months before you want your benefits to start. Your benefit depends on 3 things: the amount earned over your career, how many years you worked, and the age at which you apply. Your benefit is calculated based on a formula that includes your highest 35 years of earnings. Your benefit is increased each year by a cost of living adjustment, or COLA. Your full retirement age is the amount a worker will receive between the ages of 66 and 67, also known as FRA. Your full retirement age is based on your year of birth. If you were born between 1943 and 1954, your full retirement age is 66. If you were born 1960 or later, your full retirement age is 67. And if you were born in between, then your full retirement age is 66 in either 2, 4, 6, 8, or 10 months. You can file for benefits as early as age 62, and if your full retirement age is 66, you'll receive 75% of your full retirement age benefit. If your full retirement age is 67, you'll receive 70% of your full retirement age benefit. For each year you wait after 62, the amount you will receive will increase up to your full retirement age. It is important to understand that if you file for benefits early, you do not move to the next level the following year. Your early benefit reduction is permanent and applies to any form of benefit. You can also receive delayed benefits by waiting until after your full retirement age to file. If you apply at age 67 and your full retirement age is 66, you'll receive 108% of your full retirement age benefit. Delayed benefits cap out at age 70, so the maximum delayed benefit you can receive if your full retirement age is 66 is 132% of your full retirement age benefit and 124% if your full retirement age is 67. Let's take a look at how to maximize your benefit. Let's assume your full retirement age is 66 and you're trying to decide if you should file early at 62 or at full retirement age or wait until 70. Your break-even age, regardless of when you file, is between 79 and 82, assuming your full retirement age is 66. Meaning if you live past the age of 82, you should have waited until 70 to file for benefits to get the maximum amount of money over the rest of your life. If your full retirement age is 67 and you're looking at filing between 62, 67, and 70, your break-even age is somewhere between 80 and 82. So again, if you're going to live past age of 82, you want to delay starting your benefit as long as possible. Some key points to remember: cost of living adjustments magnify the impact of earlier delayed benefits, and the longer you live, the more beneficial it is to delay benefits. Now let's take a look at spousal benefits and divorce spouse benefits. Your spousal benefit is equal to 1/2 the primary worker's benefit if the benefit is started at full retirement age. And in Social Security lingo, the primary worker is the one who has the highest Social Security benefit. If taken prior to full retirement age, they're subject to further reduction. For example, if you file at age 62 and you receive your spousal benefit, you'll receive 75% of 50% or 37.5% of the primary worker's full retirement age benefit. If you were born January 2nd, 1954 or later, upon application, you will automatically receive your benefit or your spousal benefit, whichever is higher. This law went into effect on December 31st, 2015. So let's take a look at how spousal benefits work. Sam's full retirement age benefit is $2,000 a month. Linda's full retirement age benefit is $800 a month. And Linda's full retirement age spousal benefit is $1,000 a month. Linda applies at full retirement age and automatically receives $1,000 a month instead of $800. Some rules for spousal benefits. The primary worker must have applied for benefits and the spouse must be at least age 62 for reduced benefits or full retirement age for full benefits. There are no delayed credits on spousal benefits after full retirement age, so it's best to apply for spousal benefits no later than your full retirement age. Divorced spouse benefits follow the same rules as spousal benefits so long as your marriage lasted for 10 years or more and the person receiving divorced spouse benefits is currently unmarried. You must be divorced for at least 2 years, and your ex-spouse must be age eligible to receive Social Security but does not have to be receiving. More than one ex-spouse can receive benefits on the same worker's records, and benefits paid to one ex-spouse do not affect those paid to the worker, the current spouse, or other ex-spouses. If the next marriage doesn't last 10 years, you may fall back to the previous marriage. If you were born January 2nd, 1954 or later, upon application, you will automatically receive your benefit or your divorced spouse benefit, whichever is higher. If you apply for Social Security before your full retirement age and work, you may be subject to the annual earnings test. $1 in benefits will be withheld for every $2 you earn over $18,240 in 2020. And $1 in benefits will be withheld for every $3 you earn over $48,600 in 2020. The earnings test ends at full retirement age. If you continue to work after filing for benefits, your benefit may increase if your current earnings are higher than your lowest earnings year used to calculate your benefit. You will pay federal tax on only 85% of your Social Security benefits based on IRS rules if you file a federal tax return as an individual and your combined income is between $25,000 to $34,000 a year. You may have to pay income tax on up to 50% of your benefits. If your income is more than $34,000 a year, then up to 85% of your benefits are taxable. If you file a joint return and you and your spouse have a combined income that is between $32,000 to $44,000 a year, you may have to pay income tax on up to 50% of your benefits. If your income is more than $44,000 per year, then up to 85% of your benefits are taxable. When looking at which states tax Social Security benefits, Colorado, Connecticut, Kansas, Minnesota, Missouri, Montana, Nebraska, New Mexico, North Dakota, Rhode Island, Utah, Vermont, and West Virginia charge state income tax on Social Security benefits. To get a current benefit statement, you can create an online account at www.ssa.gov to review your personal statement anytime, or statements will be mailed to workers age 60 plus who have not set up an online account. If you do not wish to set up an online account but would like an estimate of your benefit, you can use the estimator at www.ssa.gov. Once you have a statement, it's important to retain it in a safe location. Let's take a look at where you can find this information online. So you can go to the Social Security website at ssa.gov, and if you scroll down, you'll see there is an option for My Social Security, which allows you to check your Social Security statement, change your address, and manage your benefits online. And next to that is the Retirement Estimator, which allows you to calculate your benefits on your actual Social Security earnings record. In addition to the My Social Security Retirement Calculator and the Retirement Estimator, Social Security has other online benefits calculators that you might find helpful. The most popular one is the Benefits for Spouses calculator, and there are many others. Let's go take a look. On the Benefits Planner under Calculators, you'll see there is the My Social Security Retirement Calculator and the Retirement Estimator that are the same as the main page, and beneath there are additional online tools, with the most popular one being the Benefits for Spouses calculator that allows you to compute the effect of your wife's or husband's benefits if you file for early retirement. If you have any questions or comments, please leave them below and I'll be sure to answer them in an upcoming video. And if you found this helpful, please share it with your friends. Again, I'm Steve Van Meter, Certified Financial Planner, Independent Advisor for over 18 years, and Portfolio Manager. I currently hold a California State Insurance License and a fee-based fiduciary securities license. I'm also the inventor of Portfolio Shield, a very unique investment strategy. Advisory services are offered by Atlas Financial Advisors, Inc., a registered investment advisory firm. The information provided in this class is for educational purposes only. Prior to acting on any material, you're encouraged to seek qualified tax, financial, or legal advice as it pertains to your situation.